from a business standpoint, there's a new deduction that was created. It's a 20% deduction for qualified business income. The definition of qualified business income is currently being debated and figured out at this point because there's a lot of scrutiny that comes with that. The other side to it is that there's a corporate change in the rate. It's a flat rate now of 21%, which is down from a top tax rate of 35%.
I think businesses probably are going to benefit, especially corporations, with the flat rate. And if they're planning on doing all of those, capital expenditures and improvements, that's going to be a big deal. Individuals that invest a lot, if their companies qualify, I think they'll see a nice deduction off of that income they have to report from those businesses on their individual return. But like I said, there's a lot of rules.
Not all of these changes are permanent. It sounds like it's permanent because they're going to expire several years down the road in 2025, but there are a lot of changes that are just temporary. So it's very easy to get caught up that these changes are going to be around for a while they won't. However, on the corporate side, there are a lot of permanent changes. So there's a lot of planning that can be done with these changes. There's a lot of talk with the corporate rate going down to 21%. There's a lot of business owners that want to make the change and think it's the appropriate time to make the change to a corporation. But we do want to talk through those changes. We have done some analysis, and it may not be in the best interest to switch to a C Corp. Just because it's a 21% rate doesn't mean it's the best option. And on the second side, just make sure you do your homework and make sure you do a lot of reading on these topics, because to be educated, first off, gives you a good foothold on what changes are applicable to you, and then seeking out different guidance will help you in navigating the new tax change waters.
The best thing to do this year, because people start making their quarterly payments for next year in April, and so I think the best thing they can do is just stay in constant contact with their CPA. If they hear something and they want to know if it applies to them about the reform, call us up and we'll be more than happy to talk you through it. We know what your industry is, we know what your business is, so we know where it'll affect you and where it won't. So my biggest advice is to just stay in touch with us, or if you just want to know based on, if everything stayed the same, what'll I look like next year? We can even do that for you and tell you what to expect in 2018.